Today we're going to be talking about a topic which I know you spend a lot of your time working on, which is international business. And what that means to us, I guess, predominantly is overseas companies and groups coming to the UK, operating in the UK, and helping those guys through their obligations and planning. I understand this is an area that you've sort of worked on for many, many years. What are the key things you've learned from dealing with these types of business owners?
Well, I mean, I've been dealing with UK subsidiaries and people setting up in business in the UK from overseas for a lot of years now. And a lot of it is about understanding just the regulatory framework, which differs in the UK compared to other countries. You know, for some people moving to the UK, they're very familiar with what the regulatory structure is. It's very similar to their own countries, but there's quite a few things which are also very different as well. And when you come into the UK, you know, you need to make decisions about how you're structured. And we do advise a lot of clients on that and help them through the journey of setting up in the UK.
Yeah, so it's not just the compliance, what you need to file and when, and what information you need to put on Companies House. I guess it's planning and helping these businesses ahead of time in order to understand what they need to do and when, because as you say, some of these things are the deadlines and the restrictions are going to be very different to where they're originally based.
Yeah, I mean, every country's different. It's very interesting when you compare regulatory frameworks, tax frameworks and reporting frameworks between countries. They can differ quite a lot. So you've got to be prepared to what to expect when you come to the UK.
Yeah, brilliant. Thank you. So let's get into it then. I've got one or two questions and let's just sort of run through these. Bit of a punchy Q&A as to what overseas companies need to think about when they are coming to the UK. So first of all, the concept of Companies House. You know, anyone that's watching this already UK based will understand that they need to file their accounts at Companies House. But for an overseas company, what are the main obligations in terms of what needs to be filed at Companies House, and how does that differ from where some people might expect things to be in their own country?
I think the first thing to highlight with the UK regulatory framework for companies is we do have a Companies House. It is a public record and it's freely accessible. Some countries have a similar sort of setup. There might be charges to access it. Some countries, US, Canada, for example, if you're a private business, private company, it's all very private. There's no filing, no publicly available information. So when you come to the UK, you've got to be prepared that your accounts, who your directors are, your person of significant control as the ultimate owner, will all appear on Companies House on a public record, which is very easy to access, very easy to analyse. And that is obviously very different to what a lot of other countries do experience. Some countries around the world, Australia has a very similar Companies House to what we do. So you've got to be prepared to accept that a lot more information about your business and who you are and who you own it will appear on Companies House.
Yeah, so accessible by anybody for free. So wherever you are in the world, you can log on to UK Companies House without payment and see directors, shareholders, registered office address and copies of accounts and other documents.
Yes, absolutely. And in terms of how much information is there, particularly on accounts, very much depends whether you're a small company or a medium-sized company. At the moment, small companies have a reduced disclosure requirement where they typically only file a balance sheet and not a profit and loss account. But as we know, from 2027, that's going to change. So that information is available. The accounts have to be filed 9 months after each year end.
Yep.
And they are then microfished, and within a few days of being filed, they're available for all to look at.
Yeah, and in terms of the basis of the preparation of those accounts, we have our own accounting standards. We have our own UK company law. So you talked about FRS 102, which is the main accounting standard that UK company accounts are prepared under. For larger companies, is there the option, or is it compulsory that they can or should use international accounting standards? How does that interact with our own accounting standards in the UK?
Well, I mean, for a lot of large companies overseas, they typically fall in the international financial reporting standards, and in the UK, our FRS 102 is derived from that. So it's very, very similar. Most companies in the UK would be filing under FRS 102. There is the option, if they so desire, to file under the IFRS. So we do typically do that for quite a few clients because it facilitates them consolidating at a higher level as well.
Yep.
I think the other point to mention in terms of accounting and accounts is obviously in the UK we have audit thresholds which are based upon size. which determine whether a company needs an audit or not. When you look at that from a UK perspective, if you've got a UK subsidiary you're setting up for the first time, you need to look at the group size internationally, globally, and apply those size criteria.
Right.
So you might be setting up a small company from day one. It might be a startup, but it will still require an audit in the first year if the global group size is over those thresholds.
Okay, so the thresholds you mentioned coming in next year, 15 million turnover, 7.5 million gross assets. What that could mean, and quite often does mean for an international company, is that they may be small to the extent that they only have to file a balance sheet on public record rather than a profit and loss account, etc. But no matter how small they are, they would still need an audit if the group size exceeds those thresholds.
Yeah,
and that's
absolutely
the international group. That's not just the UK element of that business.
Absolutely. So you need to look at that from a global perspective.
Yeah, important point. Just when it comes to the group side of things, UK based groups have to file consolidated accounts if they are over those thresholds. So consolidate their figures into the holding company and file those at Companies House. How does it work if you have maybe a small UK group that's ultimately owned elsewhere? Is there an obligation to file consolidated accounts to sort of the UK holding company point, or if there is an overseas parent company elsewhere, a larger group, how does that impact on the requirement to prepare consolidated accounts?
Yeah, well, that's an interesting one, James, because we see both sides. I mean, typically, the current legislation requires the UK company, if it's a group company, and it requires a consolidation, as in it's got its own subsidiaries in the UK, you should consolidate at the highest level in the UK. There is an exemption from doing that, but you've got to be prepared to file a set of consolidated accounts from another country on UK Companies House alongside those accounts. We typically see with public listed companies, where the parent company is public listed, that they're more than happy to do that because that information is publicly available anyway.
Yeah.
So everyone can access that anyway, and therefore can take exemption from consolidation. And what that does is that just saves a lot of time and cost in consolidating at a level where you don't need to when you're consolidating already at a higher level.
Yeah. Okay.
But for other countries, we see it a lot with the US. Your consolidated accounts in the US are private. They're not on any form of public record. So do you want to put them on UK Companies House just to take an exemption and then let them free available in the US? Because obviously anyone in the world can access Companies House in the UK.
Yeah, agreed. That must be interesting conversations that you have with clients around these areas. And I dare say, as you say, if they're not freely available elsewhere, then you're probably consolidating at a UK level, even if that isn't the ultimate parent company. So next up, Simon, I've got tax, and I guess more specifically corporation tax. What are the main requirements for UK companies to file their tax returns and pay their tax?
Well, when you prepare your annual accounts, obviously they get filed at Companies House, but equally there's a requirement to file them with HM Revenue and Customs, along with a corporation tax computation and a corporation tax return. The tax is actually due 9 months and a day after the end of that financial year, although you do have 12 months to file the return, which is a bit obscure because you've got to work out how much tax there is to pay before you can do the return. So that's something to be mindful of, that you're sending the same accounts to the tax man as you are to Companies House. There is a requirement if your profits are over a certain level that you might come into paying quarterly instalments for corporation tax, which is a bit of a game changer in terms of cash flow. There's typically a year's grace before you get into that. So you do need to be mindful of that. In year 2, you might be paying last year's tax bill as well as paying it on account for this year's tax bill. So something that needs plotting out in terms of cash flow requirements.
Yeah, because ultimately for one standalone company, the requirement to hit quarterly installments is quite high, but you then factor in the number of associated companies. So if you're within a group, that requirement could drop down quite low, couldn't it? And so small companies could be caught by quarterly installments.
Exactly. I mean, there's a £1.5 million taxable profits threshold, but that's for one company. So if you've got 2 companies, you've got 2 thresholds of 750,000.
Yeah.
Got 3 companies in the UK, you've got 500,000 limits. So something to be mindful of. You need to think about how many companies you need in the UK and is having too many, causing cash flow problems from that perspective. But some certainly to keep an eye on as the business grows in the UK.
Yeah, I often think that those sort of filing deadlines are quite interesting. As you said earlier, 9 months to file your accounts for Companies House, 9 months to pay your corporation tax if you're not subject to quarterly instalments, but 12 months to actually tell HMRC what tax you owe them. But in reality, the deadline we all work to is 9 months, isn't it? Because otherwise, you can't file your accounts and pay your tax if you haven't done it by that point.
Yeah, I think it's very typical. I mean, having 9 months to do something is always easy to put things off. We typically like to work on quarterly basis, such that a December year ends all filed by the end of March, so people know how much tax they've got to pay. Equally, putting information on public record, if it's good news, can be to your advantage. So if you've had a good year's worth of accounts and you're trying to build up a track record for credit rating, I'd always be recommending filing your accounts as soon as possible. Equally, if it's bad news, you can wait to the full 9 months. But that then kind of creates a picture, if you look back through the history, of how quickly people do file. For me personally, the discipline of getting your accounts done on a timely basis, getting them filed, and knowing exactly how much corporation tax you've got to pay well in advance is always the best way to go.
Agreed. And just very briefly, the actual tax rate itself, large companies rate 25%. There's a small companies rate behind that, but for the majority of companies that I guess that you're talking to in this area, it's 25% is the rate you're basing things on.
It's 25%. I think it's there to stay now for a while. Historically, we did have the corporation tax rates coming down in the UK, and they got as far as going down to 19%. With promises they'd go to 17%. But then we had it all kind of reset to 25%. And I do think that's what's going to be the status quo for a while now.
Yeah, okay. Just very briefly before we do wrap up, in terms of some of the services that we can help these organisations with, payroll, employing staff, VAT, that kind of thing, they're all relatively common considerations, aren't they?
Yeah, they are. I mean, payroll, if you were going to employ people in the UK, they need to get paid. So you need to register to have a PAY scheme and deduct tax of people's wages on a regular basis. It's probably worth pausing there and just mentioning about the fact that our employment law in the UK is maybe very different to other jurisdictions globally. And I think it's fair to say that it's very much favourable to the employee rather than the employer. Other employment lawyers might differ or disagree with me on that, but I think it's fair to say that might become as a bit of a surprise to international businesses come to the UK. VAT, again, it's a tax which is collected by the business, payable over on a quarterly basis, whereby output VAT is deducted from input VAT and the calculation paid to work out how much is collected by the business every quarter and paid over to the taxman. Yeah,
so you're charging VAT on your sales, collecting that in and paying that off to the VAT man, which I don't know if that's a common concept. A sales tax is what VAT is, and put in those terms, I guess it is a bit more common globally.
It is. I mean, for some countries they have a lower rate, but it's purely a sales tax. Whereas ours is a value added tax, such that you can claim back the VAT that you've been charged on your expenses. So there's a slight difference between a value-added tax and a sales tax. Some countries might be kind of shocked with our 20% value-added tax rate that we do.
But as you say, deduction for expenditure incoming. Just finally, and sort of the one area where we get involved from the outset for many of our clients is actually coming to the UK for the first time and setting up a company. You've talked earlier, Simon, about the Companies House obligations of filing accounts and the various information that needs to be placed on public record. But the process of incorporating a new limited company, I think from my experience and discussions we've had previously, that actual application to register a company can vary considerably in different countries across the world as to how much capital needs to be put down, what sort of paperwork needs to be both prepared, warranted, signed off and approved. In the UK, it feels to me that it's a relatively straightforward process, isn't it, to incorporate a limited company, but information is required from the outset.
Yes, it is. I mean, typically in the UK, you can have a low called up share capital. You can actually just have £1. Other countries require a higher level of paid up share capital, but for a private limited company, it's just £1. there is a requirement to appoint at least one director. And we touched on this off air earlier that practically, when it comes to set up a UK bank account, having a UK resident director certainly helps with that process of applying to a bank and getting a bank account set up. There's also a requirement to have a registered office. We act as a registered office for a number of our clients. So there is a location somewhere in the UK where the company can be contacted. For directors being appointed, there is a requirement to write to Companies House and notify them of their residential address, albeit that doesn't appear on public record. It's just for the authorities to know where that director lives. And they can also use a service address, typically the same as the registered office as well.
Yeah, because we quite often act as service address for the directors and the registered office for the company, whereas the actual personal information, as you say, is not published on Companies House on public record. So that's an interesting factor, I think, that is going to be useful to know. Okay, Simon, I think for now, I think there's certainly more content in this area, but for now, I think that's covered off sort of my initial questions. Is there anything else you think that people thinking of coming to the UK for the first time, where should they start? What should they do as a starting point? Is it to get in touch with someone like us and have a discussion about their strategy, or is there a stage before that?
Certainly, to contact us at the earliest opportunity. We can help guide them through just how they want to structure things in the UK. Very much depends on what size and nature of the business they want to set up.
Yeah.
Equally, it's worth them talking to their local bank as to who is a strategic partner in terms of banks in the UK as well. There's a lot of global alliances between banks. And from our experience, it certainly makes that process easier if you've had dialogue with your existing bank and your existing country to see how they can connect you with a suitable bank in the UK as well.
Yeah, fantastic. Okay. Well, for now, Simon, thank you very much for your time.
Thanks, James. Good to catch up.
And for everyone listening, thanks for tuning in. Join us again next time. But for now, see you later.